Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. I'm on a mission to equip business founders with the financial savvy they need to grow real wealth. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Let's start crafting. Hello, I'm Katrina M. Craft. I'm a tax strategist, a business coach, also a wealth growth coach. Today, we're diving into the shocking tax mistakes that's costing your business thousands of dollars. If you are a coach, creator, or consultant, this episode is for you. We're going to dig deep into those mistakes that I find business owners are making. And not only are we going to talk about those mistakes, we're going to talk about how to correct those mistakes. So let's buckle up, get settled, get your notepad, and let's start crafting more cash. As a tax strategist for over 15 years, I have seen mistakes when new clients come to me. One of the biggest mistakes I see is not structuring properly, not really considering if you should stay as a LLC, sole proprietorship filing, or if an S Corp, C Corp, or a partnership would be the best entity structure for you. Those types of decisions could be costing your business thousands of dollars because at a certain income level, it makes sense not to be a sole proprietorship. You should consider an S Corp status because the S Corp status is going to allow you to take draws that are not subject to payroll taxes. That could be a huge savings to you. Also, you may want to consider a C Corp. If you're planning on growing your business and selling part of your business, selling stock to others, a C Corp may be the best business structure for you. Forming as a C Corporation could be really beneficial because if you make the qualified small business stock election, it could provide significant opportunities, especially if you're a high growing business and you want investors. There are several advantages of using the qualified small business stock election. The first one is the possibility of tax-free gain. That means it allows eligible shareholders significant benefits, especially for high growth businesses and investors. Huge and key advantage is to exclude up to 100% of capital gains on the sale of qualified small business stock. That applies to stocks that's held for at least 5 years. There's an exclusion limit of greater of $10 million or 10 times the basis, the adjusted basis of that stock. But this can result in zero federal capital gains tax. So that really makes it attractive. It's an attractive option for investors and business founders. Let me give you an example, a scenario on how you can save large amounts of money when you invest in a qualified small business stock. You invest $25,000. You hold it for 5 years. You hold the stock to qualify for the QSBS. That's the benefit. Then you sell at $500,000. So after 5 years, that investment sells for $500,000. You would have a capital gain of $500,000, which is what you sold for, less the $25,000 of the investment amount. That's $475,000 in capital gains. We're going to assume that your tax bracket is 30%. That's your federal and state capital gains tax rate. Let's make that assumption. Without the qualified small business stock election, your capital gains tax would be $142,500. That's $475,000 for the capital gains times your 30% bracket. This amount, it would be owed in taxes upon the sale of the stock. But With the qualified small business stock election, 100% exclusion if you follow the rules, your capital gains tax owed is zero. With the qualified small business stock election, you would have 100% exclusion. That means you would have zero capital gains tax to pay. That's only if you do not exceed the QSB limit of 10 million or 10 times the adjusted basis. So you save the entire 142,500 in capital gains tax. That's why tax strategy is important. Knowing a simple rule as a qualified small business stock and making that election properly and timely can really maximize your savings. What could you do with an extra 142,500 in capital gains tax that you should have paid? You could use that to invest in another business or grow your current business. So again, tax-free gain on the 475,000 and you save taxes of 142,500. Why is this powerful? The QSBS election allows small businesses and investors to retain more profits from their investment. Remember, the IRS code, it really benefits business owners and investors. That's why it's important to understand the tax code and to utilize it and maximize your deductions, your savings, and working with a tax strategist allows you these code sections, allows you to make sure you're taking the election properly and timely and that you qualify. Knowing and utilizing the qualified small business stock election properly can result in you having additional access to venture capital and investors. So if you're trying to grow your business and you want investors in your business, if you understand how to sell the idea of the qualified small business stock to the investors, investors are more likely and willing to provide funding if the company qualifies for this qualified small business stock benefit. It provides enhanced credibility and growth potential for you as well. So a C Corp often appears more credible and professional to larger clients and potential investors and strategic partners. And it provides you more flexibility to scale your operations and issue stock options and go public if desired. The C Corp is going to give you limited liability protection. So shareholders have limited liability. That's essential, especially if you have investors and shareholders. They don't want to take on the liability of the company. So they have limited liability of their personal assets and the business debts and against legal claims. Another benefit of choosing to be a C Corp is really the flexible compensation of equity. A C Corp can issue stock options and other equity-based compensation, and that could be utilized to really attract and retain top talent. The C Corp has a lower tax rate. It has a flat 21% federal corporate tax rate in 2025. And that could really be advantageous for companies that are reinvesting their profits into growth or R&D rather than distributing them as dividends. You must consider when you're selecting a C Corp if you're going to distribute dividends, because if you distribute dividends, you may be subject to double taxation. That means that the corporation is paying tax on their profits, but when you do the distribution of dividends to your shareholders, they must also pay tax on the dividends they receive. That's why often you may hear that a C Corp has double taxation. But consider if you are a C Corp and you don't plan to have the dividends and you're going to use that to reinvest in your company for growth or research and development, then having a flat 21% corporate tax rate may make sense to you. But you do need to consider if you are a S Corp or if you're LLC filing as a sole proprietorship, then those funds and the net profit go to you on your personal tax return. And if you're in a lower tax bracket than 21%, that's a consideration as well. That's why it's not a one size fits all. And you cannot just ask someone who is not a tax strategist, who is not looking at your overall picture, your overall goals and the overall projection of your business, what type of structure you should have. What's right for one person may not be right for you because it's really dependent on your revenue, the income, as your household and your total household, and also your growth potential and what your plans are and your goals. If you want investors involved, if you want to offer stock options to employees because you want to incentivize them, there's a lot of questions that you must consider. And it really depends on your goals and what you want for your wealth and your future. That's why, as a tax strategist, it is important. These types of decisions, just like we've talked about the qualified small business stock election, could save you hundreds of thousands of dollars, but missing that election could cause you to lose money and to really pay capital gains taxes on a decision that you could have avoided. Remember, choosing the wrong business entity could cost you money. You could save thousands of dollars by making sure your structure of your entity and your business is really structured properly and to your benefit. Another missed deduction that I often see business owners make is not taking all of the legal deductions that are possible. The IRS tax code is over 6,800 pages. And when you include all of the regulations and IRS guidance that go along with the code, it's estimated that there are over 75,000 pages. As a business owner, I know that knowing all of the rules and regulations in the 75,000 pages of the tax code is unreasonable. That's why you are working with a tax strategist that could help you navigate those deductions that are reasonable and those deductions that are ordinary and necessary for your industry. It's important to work with a tax strategist that understands your industry and understands those types of deductions that you should be able to take. Knowing home office deductions, I see that's often missed or not taken because people are afraid that they're going to be audited. Not hiring your children, not depreciating your assets or maximizing bonus depreciation and taking a write-off in the year of purchase. Also, your travel deductions, your automobile usage, those are just standard deductions that a lot of people, they're simple, but people are missing. And just imagine other deductions that you haven't even heard about that we talk about in our wealth building and tax strategy savings plan. As a coach, I work with you and we talk about your goals, we talk about your strategies, and we're working together for 5 months, twice a month, to look at what we can implement and making sure you're maximizing those deductions and you can use that money to grow your wealth, either building your business or investing in real estate or investing in stocks or mutual funds. But we want to make sure that we understand what your goal is, what your strategy, and we help you create that plan and implement that plan. Another area that I often see business owners miss is not properly planning for retirement. As a business owner, you need to make sure that you are maximizing your retirement because that could be a deduction for your business. Why pay the IRS taxes instead of using that money to invest in yourself, to invest in your retirement, and to get a deduction for these retirement plans in your business? It makes sense. And if you hire your children, if you hire your spouse in your business, they can also be a part of these retirement plans. So your wealth for your family grows. That's a smart decision. And those decisions can be thought through because there are different opportunities for retirement plans, from pension plans to 401ks, to simple plans, to SEP plans, to a traditional IRA versus a Roth IRA. So understanding all of these concepts and what makes sense for you, your goals, and what makes sense to maximize your tax savings in your business is very important. And I often see business owners not address those things. Another deduction that I see people miss, or it's a tax strategy, is not properly planning your cash flow and your estimated taxes. So the IRS is a pay-as-you-go system. That means they're not going to wait until April 15th to receive their money. If you are making money in your business and you're not withholding enough through W-2 withholdings, you need to make estimated taxes. Don't be shocked at tax time and you have a $50,000 bill that you were not aware of. That's why it's important to have quarterly meetings at least with a tax strategist. And we look at, where are you now in your business? What type of estimated taxes do you need to pay in? Because if you do not pay in enough throughout the year, you could be subject to estimated tax penalty. That means the IRS is going to penalize you because you did not pay in enough quarterly when that money was earned. A lot of people don't understand that. They think that if they pay by April 15th, their tax amount, they would not have penalties, but that is not true. An estimated tax penalty could be assessed. If you do not pay in 100% of your tax liability that you owed last year, or 90% of what you're going to owe this year, you could have an estimated tax penalty. We work with clients to help them save money in taxes. Let's talk about real results. When we take on a new client, we're going to make sure that we can maximize your tax savings. Our average savings for clients is 25% in the first year. And that could repeat year after year, as well as is going to allow you to maximize other strategies as we continue to work together. That means that you're going to have more money in your pocket and you're going to have a larger business profitability. Because if we are putting in different aspects of tax savings, you can use that money now to reinvest that in your business to grow your profits in your business. When we work with clients, we create a strategy. Within 1 week, we're going to have a strategy for you. That's going to be the initial strategy that we can get up and running, act really quick on, so that you see real results really quick. And it's going to allow you to just have a larger trajectory to continue and to see how taxes can really impact your business and your bottom line. We'll continue to work together every other week, and we will work together for 5 months to continue to have additional tax strategies, as well as we're going to implement those strategies. Because what good is a strategy if you don't know how to implement it? So we're going to work with you to really implement those strategies. We talked about hiring your children. What's needed? You need to have a job description. You need to make sure you're tracking their hours. They need to make sure they have a reasonable wage. And then if you want them to invest and have retirement, you can set up a retirement. How does that work? Did you know that if you set up a retirement account, the IRS gives you a credit in some ways if you are setting up the proper type of retirement plan? The IRS gives you money to invest in your business and to invest in employees. Again, the IRS code is set up for business owners and investors. Use the code to your benefit as a business owner. Use the 75,000 pages of code and guidance to really maximize the code legally and to maximize your savings. When I talk to business owners, sometimes I hear, my business is doing fine. Why do I need to change anything? You're doing great, but you could do better by keeping 25% more of that hard-earned money and saving it instead of paying it into the IRS. You can use it to reinvest in your growth. So what could you really do with that extra money? Why not see how a tax strategy could really impact you? If you talk to us, we're going to look at what we can do to help you save money. And we're only going to work with those clients that we can impact their tax saving strategy. You may be thinking, I don't have time to deal with any of this. That's why we handle everything for you. We make it easy with a clear process, freeing you to really focus on your business. We have the plan on what we need to do to implement the strategies that's going to impact you immediately. And then we continue to work with you year after year to implement additional strategies as your business grows, as your goals change, and as you begin to see that using the tax code is a great way to utilize your business to grow your wealth. Tax strategy is essential for business for many reasons. The first is taxes are often the business' largest expense. It could be a large expense for you. So why not utilize the code by maximizing those deductions so you pay less taxes? utilizing the code to invest in your retirement so that you have something to retire with that's going to grow and just going to increase your wealth. Use the business to educate and inform your family by hiring your children or your spouse so that they continue to learn about business and they're getting paid. It's a deduction for you, and they can invest in retirement, which is also a deduction for you. Why not use the code instead of paying to the IRS? Allow the IRS to pay you to invest in your business and to grow your wealth. If you're ready to stop overpaying taxes and ready to start building wealth, call us. Let's discuss what your goals are. Let's discuss your business, and let's see if we can work together to create a tax strategy for you. Go to craftmoneymap.com/call to book a call. I'd love to hear about your business to see if we can help you with your finances and to grow your business wealth. Also, continue to follow me on YouTube and all of my socials at CatrinaMCraft.com. Make sure to like, share, and follow, and continue to learn about proactive tax planning. It's not just about saving money. It's about creating the financial freedom you've worked so hard to achieve. So let's craft more cash together.